everybody. We are at Wall Street Tactical. We have Steve Kalayjian here with us, Mark Verso, and we're going to get started and do a couple questions for Steve and talk about the market this week and going into Q1, Q2 end. Go ahead, Mark. Why don't you introduce Steve?
Yeah, so we've had Steve on last week, and for those viewers of you that were fortunate enough to watch that video, you probably heard Steve talking about the SQQQ, which he said would probably be a good buy at the time. And if you've followed along with that trade, that's done pretty well, Steve, with the market volatility. Do you have any upcoming, predictions that's still a good trade for you, or are you phasing that out at this point?
So welcome, guys. Great seeing you guys again. So when we talked last time, I was seeing a really big sell divergence on the weekly charts, right? So when I really focus on for long term, and when the S&Ps were trading about the 4,800, 4,808, my target really was like a 4,835, 4,850 for the top. But at 4,805, 4,808, I must have told dozens of people that you got to take money off the table here, or go into cash. I said, just my, second cousin, got inheritance, and he's been in the market since 16, 17,000. I said, you got to get out here. And I told so many people, I just saw a potential fall here of thousands of points and hundreds of points on the NASDAQ and hundreds of points on the S&P. So I was telling everybody, as protection, I don't look to hedge. I look to exit on a divergent sell that I was getting on the bigger time frame. It's not like, you're going to buy a stock and then sell a call against it or anything like that and just keep the underlying. This here was an all-out sell that I saw on the market. So when we dropped from the 4,808 down below the 4,450 on the S&Ps on a closing basis, which actually happened on the Friday 2 weeks ago, I got a monster sell signal on the S&Ps on the weekly. The uptrend from March of 2020 that we carried us all the way up is over, right?
Right.
And so basically what happened there was the market pushed up maybe 50, 80 handles on the S&P, 4, 5, 6, 700 points in the Dow, pushed down to a new low, 42.12 3/4 on the S&P futures. Then I said we're going to we were like 350 S&P points from my moving average. And I said, normally the norm is anything greater than 50. We were 350 plus. So I expected a monster rally, and I tweeted it out, monster rally coming, boom. S&Ps ran 200 off the low. The pattern that I have right now is so bearish on the daily and weekly charts that any push up, even near we got up to 44.37 a couple of days ago. Today's high was 44.22. So even if we get a push up to 44.75, 44.80, 45.20, 45.30, they, in my opinion, are screaming short. You don't get sells and then buys on the weekly charts like that. They're prolonged outward, okay, especially on this pattern. So the weekly needs to regroup, come in. This could last for months now, okay? And the volatility is just so insane that I'm able to help people adjust to this volatility in trading, in offsetting their positions and trading around their positions and things like that. So with volatility also comes opportunity, as long as you have a mentor like myself helping you, guide you. Because look, I've been in this game for almost 39 years, so nothing surprises me. I have snapshots of a negative 45 oil. I wanted to fill my swimming pool up with oil, but they won't let me take full delivery. It's only a liquidation that day. I saw the Dow down 3,000 points. You ever think you see a Dow down 3,000 points? I remember when 500 points was a monster day between the crash of '87 and the long-term capital back in the '90s and '80s and '90s. So, so what you're seeing here, okay, is we just called a monster short on the S&P as well. They just dropped 25.
Yeah, let's talk about that. So the Spider S&P 500 ETF trust. I mean, if you look at the trust, that usually, is literally 1,000 points. It's multiplied by 1,000, you get the full rating.
Well, basically, what the way every 100 points on the S&P futures equals 900 points on the Dow, which equals $9 on the Spiders. Right?
Yeah, so Spider is currently at 431.92, which if you look at the S&P, just for the viewers, if you look at the S&P right now, it's about 43,000. It's really right there on the number. It's just a decimal point they've moved over, but it's not really that exact. But 432.19, if you look at the 6 month, the Spider was at 428. Now is at 477 was the high January 4th. It's down to 431 right now. Did you see that move from January 12th from 471 down to 431?
Well, when the S&Ps and the Spiders were pushing up to new highs, I was seeing this monster sell divergence on the weekly charts, and I was just like, "Oh my Lord!" Now, did I think they're going to drop 600 points in a month? No, I'm not going to sit here and tell you that. But I thought they were going to go down and gradually head lower. Look, the bottom line is this, right? The Federal Reserve is really in a pickle here. They really, in my opinion, they don't know what they're doing, right? They say that their limit here is 2% inflation. We're at 6.8% inflation. They can't raise interest rates. They left them at zero. I remember when the Dow hit 10,000, Fed funds were like 4.5, 4.75, 5. That's when the Dow was 10,000. We're at 36,000 and change, and we're at 0 to a quarter. Come on, you got to be kidding me here. They're just pumping this game up so much that it was just like a bubble. It's going to implode, and that's what's happening here. So the Federal Reserve right now knows they're pulling their hair out of their head. They know there's monster inflation. I don't care if you want to hear about supply chain, docks, ships in the harbor, this, that. You can't get trucking. Irrelevant. When somebody goes to pay for something, it's significantly higher than where it was, right?
Yeah, it is. Like milk. Look at prices.
Milk, lumber, anything you could think of. You got 8 million people looking for work, but 11 million jobs. Okay, the government's giving these people money to stay home, and you're not factoring in. So the Federal Reserve, in my opinion, they should be abolished. Okay, let things fall naturally. Rates should fall naturally, like the market. Nobody, well, I don't want to get into conspiracy theories or anything like that, but nobody should mess with the markets. Markets should be natural, but that's not the case. You got so much intervention with the Federal Reserve and central bankers and et cetera, et cetera. But let's just say that the Federal Reserve, their target was always 2%. Oh, if it hits 2%, we're going to start hiking rates. Well, you had 6.8%.
Yeah,
right?
I mean, they're putting out numbers that unemployment is down now. That jobless is a little bit down, which is good.
You can do anything you want with numbers. I can tell you stories that would make your head spin.
Yeah, they're comparing the peak. What I'm looking at on a strategically, just on a trading level, right? We're here to talk about trading in stocks, and just a little bit. I want to introduce myself. So my name is Sam Ghosh. I'm the CEO of SEG Universe. We work with a couple of people on Wall Street Tactical with Mark Verso, Steve Kalayjian here, legendary Wall Street trader. Basically, what we have here is on the S&P 500 ETF Trust. We have, if you look at the 1 year, just for the viewers, keep it really simple. Anybody that's watching, and this is what I try to tell people, and maybe Steve, you can tell me what you think about this. You can't get into 1,000 positions. You can't control 1,000 positions. Just take 1 to 3 positions that that you can control, because the average trader is not calling their broker every second being like, get in, get out, get in, get out. They're not doing
it. Depends on their horizon too. Right. I mean, nobody should have 1,000 positions. The most I ever had was 120 positions probably at one time, right? Yeah. I mean, and that's someone who pretty experienced.
But for the average viewer, they want to maybe come in and get in on like 4 to 5, maybe 10 positions, hold it, know when to exit. Now, when we're looking at something like the S&P, most people have a day job, Steve, right? Most people have a day job. Most people are not trading full time. They have kids. They have so many things that they do.
I'll tell you, so many people are trading from their phones at their work. I can't even tell you in my room. I'm telling you, there are people, you know, they just stream on and they're listening to me. We just called the S&P's just dropped 30 handles just now in the last 10 minutes since we've been talking. We had a beautiful short. They just got to 53. I think where are they trading now? I mean, they got to be trading 30 lower here.
So 431.81 was the S&P 500.
No, I talk about the futures. Yeah, and
okay,
where are they trading right now? 22. So they dropped 31 handles. I knew it. I could see it from behind my head. So in theory, right there, that was a 200-point drop on the Dow.
My question was, do you recommend people trade the ETF, the S&P 500 ETF?
No, I mean, I think if I was in the market the way the retail investor is, I would be looking at like the TQQQs, the TNAs, the TZAs, the inverses. I'd be more prone to trade index ETFs than individual names. And I'll tell you why. Tesla had great earnings. Stock's down 75, right? So the high was what, 1,200 and change, right? Mm-hmm. Now it's 865 or 875 or something like that. I'm not a fundamental, right? But I think that when the markets go, you have better returns in like the Russell, the double long, or the TZAs, the double short, right? Names like that, like we talked about the SQQQs, right? Last time I thought they were I didn't mention the QIDs, which are the same thing. But if you look at like the SPXUs, I think the print, I tried to buy them at 13. The print low is 13.01, and they trade up to 16.5, 17. That's a monster return, right? $3.50, $4 on a $13, $13 and change investment, right? So if you really think of it, I think like when the market sold off a couple of days ago, this Monday, and we were down 1,100 points, I was buying in my own personal account, TQs, SSOs, what else was I buying? TNAs, Now, did I think they're going to rally and be up on the day like they did on Monday? No, but I thought we were going to get a monster rally, right? I bought Apple. I bought, just Apple. I just wanted to trade. But these names, I just knew the distance we were on the bigger time frame. So I think there's a lot of advantage, in my personal opinion, to be trading the underlying ETFs versus trading an individual stock.
Yeah, let's talk about some of those tickers. So we got QQQ, just for the viewers, so they can follow along, and then they can check out your trading courses as well as live trading sessions. So the tickers, we have SPY, which is a Spider S&P 500 ETF trust. And then we have TQQQ, which just shows up, I think, as QQQ on the tickers. Right. And so if you're
type in TQQQ, you could type
so for the viewers, take a look at these. Take a look at what Steve is talking about. When we're talking about these types of moves, really, like the SPY, you can kind of really trade the SPY based off of the trend that's happening for the day. If for example, back in 2020 March, this is the easiest example to kind of say, so you can look at the charts. Back in 2020 of March, the S&P was at a major low. If you had any liquidity and you just bought in March, held principal plus bought options long term, you would have made over 100% return.
Easy. So that brings up a really good point, because like today, for example, a bunch of people were saying, Stevie, we're going to short the Qs. Yes, I have sells on the Qs, blah, 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 blah. But right. I said, guys, the Qs are trading in the 300. The TQs are trading in the mid 50s. You could do more TQs versus trading Qs, right? So the spiders are trading 400 and change. Why trade the spiders when you you could trade SSOs or the SPXLs, which are a third of the price, right? So you can do more, and you don't have to commit that much capital. Okay, so there's an old saying, right? You could there's more than one way to skin a cat, right? So when the markets back in March of 2020 got absolutely kabooshed, right, with the COVID scare and everything, I bought U-Pros. I bought TQs, right? I didn't go buy an individual name. Now, because if the market's going to go, I mean, how many things can you buy, right?
Exactly.
I was buying the market going up, right? The UDALs and names like that, the TNAs, right? So when you get extremes of that nature, obviously, if the market's going to go, Apple's going to go, Nvidia's going to go, all the names are going to go, Facebook's going to go, Microsoft's going to go. But why put yourself in a name that you may be bumping up against earnings, right? That could alter the move. I mean, you may be buying it a week before if we got a big sell-off, and all of a sudden the following week is earnings week or something starting up for that quarter.
Right.
But if you're involved in the indexes, you don't have to worry, in my opinion, about the earnings aspect.
Let's look at that. So the ProShares Ultra QQQ back in March, when that big dip happened, it went from $26 down to $8.88. That's what it was on March 20th.
That's not really. It's showing you now. It just split 3 for 1 a couple of weeks ago, like a week ago. So I guess
was it around $20?
I think it was, if I remember correctly, I was buying around 33, 34, 20, 31 or something like that.
The big COVID dip happened like March, and it was at $8.80.
I know, but the TQs just split here, so it's going to get adjusted all the way back on the data. You know.
Okay, got it. So it hasn't adjusted yet, but now
it did. It adjusted for the split that just happened a couple of weeks ago. So if this split didn't happen, then you would have seen exactly where it was back in March of 2020.
I see. So you think maybe it was the overall?
It was probably the mid-30s, if I remember correctly, when I was buying it.
Well, and it's been adjusted now, so it was $88 adjusted, and then now it's down to 52. So at 52 right now, are you thinking a long position on TQ? No,
I'm looking for unless we get some significant aberration where we're going to get to. Remember, we just got a deep oversold condition, and the S&P's rally in 200, the Nasdaq rally like 700 off the low, right? My perfect scenario is we get a push up. You know, you can see every single day. Yesterday, the S&P's dropped 100 points off the high at one point, right? So yesterday's high was 44.37. They dropped 100. Next time I blinked and they were down 100 off the high, right? So what I'm looking for in this scenario, I have sells on the bigger time frame, the dailies and the weeklies. So I'm looking for if we can get some type of a push up here, okay, near my numbers, the 44.80, the 44, the 44.50, 20, 25. I think it's a selling opportunity. Granted, you're way below the highs of the 48.08, so you're 300 S&P points. So in theory, you're probably around 1,800 points off the highs of the Dow, about 2,500 points off the highs for the Dow. But I think you're gonna get kabooshed here. I think you're gonna go, if we get this push up, then I'm hoping to work off this oversold condition. I think we're going, boom, we're going right back down.
Right back down. Okay. The S&P was 43.22. It went up to 47.96 January 3rd. And now it's down to 43.24.
Right. So we got that low.
That's what you're talking about. The volatility is huge.
It's wild. I mean, look at this. Before I came on, we had a monster short pattern on the S&Ps and on the Nasdaq, and I was just screaming short. And the S&Ps pushed up. Our range was, I think, 46.5 to 56.5 range, or 45 to 55.5 range, and the Nasdaq was the 80 to 10 level. the 10 to 40 level, both got into the range. People were getting short. The S&Ps are down 40 handles from here. That's $4 on the spiders. The volatility is here for the appetite for those that want to trade, right? And a lot of people, believe it or not, don't know how to short a market, right?
Yeah,
so I'm here to help them using my analytics, teaching them these patterns. Now, these patterns are and these strategies I've created, I've always forward tested. So they're not back tested, and I don't believe in back testing crap and none of that. So these patterns, these strategy patterns, are something I built in my courses, that these patterns repeat themselves. And we wait patiently for them to happen. Like right before we came on at 12:45, I said on my Twitter, the highs are in for day. Boom, I got the sells on all the ETFs. Look for the first bounce. Boom, on the smaller time frame, got up there. Just let them have them. Let them have them. Boom. There you go. 40 handles, 4 points.
Looking at the S&P 500, that's one that, yes, they can. A lot of people on retail trades on apps and stuff, they're all trying to trade short-term options. They're trying. If
Are
they're
you kidding me? You know, the E-mini, the micro E-mini market's exploding.
Yeah. So we're seeing a lot of increase in, SPY options, weekly options.
People doing put spreads, people doing call spreads now, because there's no margin requirements for day trading on those. You could trade the micro E-minis. I know people who open the accounts, and you could sell 5 micro E-minis in every 1 point. So they make $25 on every 1 point on the S&P. If the S&Ps drop 40, make 100. Imagine you caught a 40 handle move down on the S&P on 5 micro E-minis. Or 4 micro E-minis, it's or 5, it's $25. You just made yourself close to $1,000 just now on a micro E-mini on $50 margin, on a $250 margin position. You just tripled your money. and I mean, it's not like this all the time. I mean, we are in some insane volatility mode here.
Most of the big retail traders are on Robinhood and Webull and
my God, they're getting crushed.
TD Ameritrade, whatever they are, right? Most of the retail traders are on that. On Robinhood and Webull, they don't allow purchase of over-the-counter markets. They have options. They have general shares. Most of the NASDAQ stocks are available. Most of the top S&P stocks are available. Now, so like they're going to trade the SPY. They're going to buy options on that. You're recommending, instead of trading the SPY, do the TQQQ. You have more.
Well, I mean, there's so many things they could trade. They could trade the Russell, the TNAs. They could trade the TZAs, which is the inverse, right? If you're betting it to go up or down, right? You could trade the the TQs. You could trade the QIDs with the NASDAQ, right? The SPXUs for the S&P, or the SPXLs for the long, or the spiders for the long. I mean, look them up. If you just go and just type in the ETFs long and shorts on Google, you'll see them right there.
So for our viewers, let's give them, because we're gonna conclude soon, but let's give them maybe some homework next time we come back on. 10 things to look up. You mentioned micro E-minis. We talked about the spiders. We talked about the Dow. We talked about the TQQs. So go ahead.
I mean, right now I'm seeing a gigantic influx of people trading options, right? And micro E-mini futures. The CME decided to come out with the micro E-mini. I was actually sitting with the CEO that night and in Chicago and of the CME, and he couldn't wait for the micro E-mini to come out because of the fact that they had tens of thousands of people using the CME simulator, and they wanted to come out with a product that was a fractional of the continuous contract, right? So people were like, "Oh, okay, I'll trade a micro E-mini. It's $5, it's $50 margin most places, right? If I put up $1,000 and it drops,
Where can they go to trade micro E-minis? Interactive Brokers, CME?
I mean, any of these firms. You got Optimus Futures, you got Optimus Futures, you got TradeStation, you got Tradeovate, you got GFF Brokers. People just call me and I'll tell them which is, what what they want. Best simulators, best front end platforms. Optimus is phenomenal. TradeStation, etc. And then you get firms like, for example, a lot of these member firms don't allow you to short some of these ETFs, right? Like the TQs, right? You have to buy the inverse, like the QID. So if you're betting the market to go down, you may not be able to short the TQQQs or the TZAs.
You can buy puts on the SPY.
Well, you could buy puts. You could do put spreads, or you could try to short the underlying ETF, like the TQQQs, or instead of doing that, you go buy the QIDs, right? So, like I said, there's many different ways to try to enact and build a position. Wow, they're getting absolutely crushed right now. 50, 60 handles off the high. So what you're realizing here is that I'm educating more and more people on different vehicles to trade, right? And that's what I do every single day here. This is about dynamic education, dynamic learning the strategies, learning the patterns, teaching them, being disciplined. You know, when you hit your goals, stop. I had a guy a couple of days ago hit us, boom. I said, stop. You've hit your goal, and you're going to make that goal every single day for the month, right? And I talk to them. I talk to them like I know them for 30 years. So people call me at home. They text me. I email me. I am very transparent. I return. There's never been one person. I look at screen in the eye. Never been one person. I never returned a call, email, text, or whatever. Right.
Right.
I believe that this environment, or what I want to do, not everybody's like me, and I don't know where I get the energy and the time to do it, but I do it. I'm up at 3 o'clock in the morning, and I'll just start blasting away. Right. I don't care. But I love it so much. And I'm going to be 59 years old in 13 days or 14 days. So I have more energy than the Energizer Bunny, right? So the thing here is that what people need to realize is the passion that you have to do this. I love now to take my knowledge between whatever's between my 2 ears and now give it to others now and teach them. And that's
so what about simplifying trading? So, you know, we're big advocates of simplifying trading. You know, trading is already very complex. And when you're looking at only like 3 things, I know I have my cousin, he made about $150,000 trading stocks and options, but he's also lost quite a lot of money. And basically what had happened was I told him, I was like, look, the SPY and the TQQQs and the DIA average, if you're just going to trade just the SPY average, there's enough volatility there. It dropped from 477.55 cents. The ticker SPDR, it's SPY. If you guys are trading on your retail apps or whatever you're doing, it dropped from 477 down to 430. You're saying it's going to, if it gets a bounce up, it's going to go right back down. Where do you think the final support is? Is it at 396? Is it going to go back to COVID?
I don't do that. I don't look at that. Do I think they're going to break 30,000? Probably. If they hit it, they're going to bounce hard. Do I eventually think they break 30,000? They could. Mm-hmm. You know, I just think that this inflation, and again, I don't believe, like somebody came out yesterday that said the Federal Reserve is going to hike 6 or 7 times. You got to be on morphine to think they're going to do that. You know, I mean, you got to think like them. Maybe 2, maybe 3 in the 4th. I doubt it. Oh, then they're going to bounce. So you know, it really, to me, I think that it's up to. I don't think that. I think also the psychology is when the markets go into free fall eventually, or they start seeing substantial. I mean, a guy called me a couple of days ago, said the pension fund that they run is down $110 million and they're only net long. Can you imagine why they're just net long, that they're not this Taft-Hartley Act, that they don't allow hedge pension funds to, you know, to liquidate or to hedge positions? It's insane.
Right.
So if the market goes down to 5,000, just gave up 31,000 points, these people are going to get wiped out. Then all these pension funds are underfunded and everything. It's just a flawed game just to be net long, right? So because we can't control the future, yes, they can, because they can move markets based upon words or actions or things like that. But remember, when you hear a guy tell me that their pension fund is down $110 million per se, right? That's an astronomical amount of money for the future of the employees going forward.
Right.
Now, granted, I'm sure they have a gigantic gain from where we were, but it doesn't mean you give up 110 million, right? I mean, what are you going to keep going? 40,000, 45,000, 50,000, 70,000, then boom, drop to 30,000. I mean, it's just the logic between what the Federal Reserve is done here by creating this bubble, right? And then having these pension funds that are completely naked to one side is, in my opinion, the two biggest flaws of the market right now.
I think next time we'll bring my father. He's an economist. He was for World Bank and did a lot of work at McKinsey, and we'll have him kind of comment on that. I think
I got a D in economics one day, and I came home and I threw the books from one end of the room to the other. I hit the window. My father said, "What's the matter with you? What's going on?" I said, "I just got a D in economics, and I know more than that, teacher." He said, "That's it. You're getting a job on Wall Street." And the next day, I got a job with Peter Kellogg at Spitties and Kellogg.
Well, I think in terms of trading, we're looking at the macro principles are always great, but we got to be able to handle the micro trades. And you do day trading. You trade the volatility.
No, I do day swing. I give market overview, long, short. You know, I do it all. I mean, because and I deal with Gen Zs, millennials, retail, people who are just starting out. Excuse me. Beginners, intermediate, long term. So I deal with all different types of traders. I just don't focus on, I mean, yes, my stream, I'm talking about so many different things. Yes, 85, 90% is more intraday moves and things like that of that nature. But I'm also talking about the bigger picture of things too.
Right. And like, that's what we're trying to just have a quick discussion, and we're going to wrap up here. And thank you so much, Steve, for your time with us today.
Oh, thank you.
And we have 477 down to 430 on SPY. We have the Dow Jones coming back down. We've talked about this on the last interview with you. We talked about that the markets are at all-time highs. There's hyperinflation happening.
Oh yeah.
Inflation is going to continue. People who are in fixed assets like real estate, fixed assets, they're going to see increases in their value. But purchasing power, in economics, you have purchasing power parity. Purchasing power is not keeping up with the inflation and the rising costs. I
think Bloomberg came out with a study, if I'm not mistaken. I don't know, don't quote me on the year. It was something in the 2035, something like that.
Yeah.
That 2035 or 2033 or 2037 or something like that, that 77% of the people in the country are going to be renting.
Wow. Yeah.
I've never seen something like that.
It makes sense because purchasing power.
I mean, look at Florida real estate. The condos that were purchased by me, by my son, and others I know pre-COVID are up 100, 150,000, $200,000 higher than where you could have bought them. The same condos 8 years ago, I could have bought for about $200,000 each, 188, 210. I paid double that. Now forget it. Now it's
climate change will probably equalize a lot of those pricing, especially in Miami.
My son calls me up. He said, "Daddy, look at this condo, $699." I'm like, "Okay, time out. How old is it?" 1 year old. I said, "What was the purchase price from the other buyer, the first buyer?" "Oh, Dad, 510." I said, "Steven, I'm not buying a condo for $699 and making this guy $189,000 richer in 1 year. Let some other guy do it." You know what I'm saying? That's insane.
Well, that's exactly what well, it wasn't exactly, but a little bit of that happened in China. In China, with the Evergrande issue, is they were building a lot of ghosts and they were expecting people to keep buying. Anyway, we have there's climate change, a lot of stuff happening with the sea level rise. So that's going to be something to watch, especially in the Florida region. But those things have big impacts on the S&P. Any major global news like the pandemic is going to move your S&P.
Well, Russia could be a problem. China could be a problem with Taiwan. I mean, any of this can trigger anything. Oil goes.
And I'm just telling the viewers, if you see major news like that, like COVID-19 pandemic, Russia, China, any global news, look at the S&P, the TQQQs, the Dow Jones.
So what I normally do whenever you get some type of news like that, right?
Yeah.
My philosophy is you wait 3 to 5 days. And if they're still, then you on the somewhere between the 3rd and the 5th, you start buying.
Got it.
Okay, for a rally, for a bounce. I'm not saying it's going to be a bull rally, but remember, short covering rallies are vicious. And we saw it on Monday, down 1,000, 11, up. That's a monster move.
Yeah, no, it happens a lot. That intraday where you're up in the morning and then you're down at lunchtime and then you're up again at the end of the day. See that I personally don't have the time to trade like that because we're running a lot of software companies. And Mark, I'm sure you don't either. So I think what we're trying to say is if there's something like that, we always ask our viewers to think long term, at least 3 months, 6 months, 3 months, 6 months, a year. People can trade intraday. You can make money intraday all day. But if you're trying to make intraday, are you really going to beat your annual return?
Oh my! Don't ask me that question. I think
you are.
I think that if you know what you're doing and you're with me, and I think returns can blow out anything just by buying and holding. So if you're going to ask me that question, I'm going to jump up and down and tell you hands down that I am a firm believer that based upon what I do, how I teach, what I'm able to achieve here, that your returns will be compounded on a daily basis. From my point of view, a lot higher returns, significant in my opinion, than if you were to buy and hold. Now, everybody can do that because they got full-time jobs and things like that. I get it.
Right.
People I'm teaching, the people, a guy calls me up. I think it was Tuesday. I literally had the phone in my hand and we were just talking and he heard me call out a level to get short the S&Ps, right? Literally, I tell you 20 minutes later, I cannot give you the number. He made 6 figures on that position, right? Now, he just heard me say it. They rallied up, boom. I think it was 4403, 4403 or something like that, 40, whatever. And boom. I didn't know he didn't even did it. He called me like, hey, good buddy. I'm like, I just made 6 figures. I'm like, okay, you serious? I go, yeah, great. So, I mean, not everybody can do that. I mean, I'm just saying, but I think that I've never been in the position of buying and holding. The only time I will say that is when the 08, the subprime market, when the Dow got below 7,000, right? When the Dow got near the 18,500 mark in March. I said, this is insane. They're going to rally, right? And Brian was telling them to buy everything, And I thought they were going to rally maybe 3, 5, 6,000 points. Did I think they're going to go from 18,000 to 36,000? Absolutely not. I mean, yes, when I got the buy on the weekly charts and then the uptrend started to happen, yes, the trend was up for well over a year, 18, 19 months. But, I think that a lot of people, this brings me back to a great story I have to tell you, because there was a great company on the New York Stock Exchange, and I knew the CEO, and it was a company called, I believe it was LA Gear. And I used to watch this stock. It was a growth stock. Went from 40. I mean, I'm just giving you an example. I think it went from 40 to 80, split, 40, 80, split, 40, 80, split, 40, 80, split. And eventually, I think the company went bankrupt, right? And I don't imagine if you didn't sell, right? And you just kept on holding it because you just kept on, it was just too good to happen. I think it was a great growth stock, And I believe the company went belly up, I believe. I mean, it's not listed LA anymore, but great people, it just, I think we hit a bad recession at the time too, if I'm not mistaken. But, I believe that, like what did Sam Walton say? He said, everything I have is for sale, right?
Right.
You
Right.
don't fall in love with something, like I understand.
With people, not with things.
Yeah, you fall in love with people and dogs and cats and animals and things like that, I love my
Not with,
dog more than my own life.
not with things. Yeah. But well, so there you have it. Steve is a firm believer that if you have a mentor and you're following the markets and the right strategies, you can make much more than holding for an entire year. Just buy.
Come to Trade Easy. I'll teach you.
There you go. So, well, Trade Easy, tradeeasy.com, and Steve Kalayjian.
We'll be up and running in probably about a week. But
okay.
You can follow me on Twitter as well at Steve Kalayjian.
And Steve, we're gonna be back here again, and we'll
we'll
see where we're at. We'll see where we're at in a week, and I think let's beg to differ. The old adage of Warren Buffett saying, like, if you just buy the S&P and hold it, like, you can't beat me. I bet you, as he said many times. But we know that here as well. Look, I've had days where I've made 5+ figures on one trade in options, right? And I know that that's real. So, but at the same time, for people who are ultra busy, like, they cannot deal with the markets. That maybe they're running.
But you know what? People are working, but they're watching CNBC. They're watching different things. They could be listening to me, and they could be going on their phones and doing some, maybe cutting down on a position,
right.
doing another position to offset that position. So, there's, there are lunch breaks. People can listen, or, they can widgets that go up on their desktop or whatever and things like that. So we have
some other software that's going to be coming soon, but your software is amazing. Trade Easy is really going to be coming out soon. And what we want to look at is how can the traders get that value? If they're buying on their lunch break, they're going to have to hold. If they're not at the $25,000 mark on the PDT level, they can't buy and sell more than 3 times in a day. So
but when I was, like, for example, if you were listening in the room, right, you would hear me say, I think we're at a critical juncture here. I think there's a top coming here. I think we're nearing the top of this range. I think there's trouble below. And we talked about it. And I was saying this for the last 2.5 weeks, So you could have just bought a SPXU and held it. You could have bought a QID, held it. You could have bought the TZAs, held it. I mean, the TZAs went from, I think, 23 to 35 or 37, So you pick up a lot of different things in the 8 hours I'm going live all day long. And I'm seeing things dynamically. I'm looking at bigger time frames. I'm looking at different projections. When the S&P hit that 42.12 3/4, I said, we're going to explode. And we rallied 200 points off that.
Right.
Now, I like to see them go. I would, in a perfect world, I like to see them go higher, 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 because the higher they go, I think the harder they're going to fall. So maybe that might be a good exit for people to get out of longs, even if they have good profits, and maybe it's not the high, right? And then boom, they drop, and then they're protected. So what did I do? I helped them based upon mathematical analytics that I use every day, and that I'm helping them that they can't see what I have, but I show them in my room and everything. So,
I mean, like today, the S&P went from 4,400 down to 4,300, and then it went back up to 4,210.
It's I got in sell reversals. The highs are in for the day. I tweeted that out. I said the highs are in for the day. I was just about to tweet the big sell reversal, but then I had to. You texted me and I got distracted.
You could buy puts from at 440 down at $10, 4,400 down to 4,300.
Yeah, where were the puts this morning when they were 44.22? Yeah, we were shorting up there.
Yeah,
we had sell divergences.
Great. So
so that's guy made I think 100 handles on the NASDAQ. I mean, it's just I'm teaching people to trade all types of markets because I've seen it all, right? I was there during the long-term capital. There on the floor of the New York Stock Exchange in the crash of '87. I mean, I've seen Dow down 3,000. I mean, come on, Dow down 1,000. Down. Remember, when you're in the 37,000 range, 1,000 points is like nothing. But when the market was at 500 or 800 or 1,000, they dropped 400, 500 points. That's a monster move compared to 1,000 points off of 36,500.
I mean, 100 points is a monster move back. Yeah.
Oh my God. Yeah. If the Dow moved $40, we were in bed at 8 o'clock at night, you know?
Jeez.
But, hey, great seeing you guys, man.
Steve, thank you. Trade easy. And we'll be back next week. And thanks a lot, Steve.
Be on the right side of the market. That's my motto.
Mark, do you want to ask Steve anything closing before we close out?
No, I think we should close, and next week we can dive more into, maybe the Fed's impact on traders and how the interest rates will happen. So we'll wait till next week.
You got it. I need a weekend to recuperate just to think about that one. So I'm not their biggest fan, I'll tell you that. So. Anyway, guys, have a great weekend. Be well, everybody. And again, thanks for having me.
Thank you.
Thanks, Steve.
Be well. Bye-bye.